Gao Xiqing was one of the key architects of Chinese securities law, but his beginnings were humble. In his teens, he labored on a railroad and even worked in an artillery factory. He was later selected as one of a small group of young Chinese sent to the U.S. to be educated in the 1980s, attending Duke University's law school as a Richard Nixon scholar. After graduating in 1986, Gao went to work as an associate on Wall Street at Nixon's former law firm Mudge, Rose, Guthrie, Alexander & Furden. He returned to China in 1988 and helped establish the country's first securities markets, including the equity exchanges in Shanghai and Shenzhen, despite the significant challenge of persuading the policymakers of the day. Gao was twice vice chairman of China's Security Regulatory Commission and took the helm as founding president of China Investment Corporation, China's biggest sovereign fund, in 2007. Although he retired in 2014, the Chinese stock market remains among his biggest interests.
Back in the year 1988, when you came back to China, try to establish the first security market in China.
The weather at that time was so much better. If you count the license plate, there were less than 100,000 cars. What a wonderful time.
Policymakers of the time were sitting there, listening to, quote unquote, these young guys talking about their dream. How did it happen?
Some of the people who are still very important in the government, and at the time they already were looking at these things. Only that they didn't have enough technical background to really understand how to actually implement it.
Exactly what did you say at those meetings?
We knew we needed to understand China's situation first. We would say, well, we understand that the financial reform is going on, and we understand that our market has all these benefits from the original ideas and the benefits from the reform. However, we also understand there are problems. For instance, the whole financing system for Chinese manufacturing industry was very lopsided, and also that was a time was right after, about a year after the general inflationary scare of the whole country. In 1987, inflation, almost right through China, and everyone was scared, and the government was very, very alarmed. So we said, well, why would that happen? Think about it. With the reform, with the increased income and everything, people were ready to buy things, to invest in something, but there's no place to go. So we say, well, if we have a new route where we can have people's savings into that sort of thing, because at that time the only savings were all in banks, and commercial banks cannot stop people from taking their deposit out. But we say, well, we would like they call it the tiger that will ruin everything. We say, now we have designed this cage for the tiger with a lock on it. Your cage right now is only the commercial banking, and with a deposit system. That cage, you can never lock it, because once you lock it, the tiger will never go in, right? But now we have a cage where the tiger will readily go in. Once it goes in, it's just one way, it will never come out. Why? Because it's a stock market. You can only buy it, you can sell it to other people, but you can't just get all the money out of the whole manufacturing system. And that moved the thinking of a lot of people. And they said, oh, this is a great idea. And also, another thing was at the time, the central government and also the economic circle were agonizing over this one problem that central government and local governments in China, how to distribute their own respective powers, how to distribute their own tax income and all these things. And this, of course, is a big problem for every major country. But for China at the time, there was only one way to do it. That's the central government ordering everyone to do it. But by ordering local governments, the central government would have to give something. And it was difficult for them to figure that out. And we said, well, if you start this, if you think about it, most assets in China at the time were state-owned. And if you start with what we call stockification, it's a coined word, meaning we take these companies public, make them a stock market, and then immediately you can divide these companies into infinite number of smaller equal value shares. And then you distribute them between the central government and local government. So easy.
1989, March. 500,000 yuan by several companies, right? CITIC, Everbright, China Venture eventually helped.
Each was 500,000. So together it's 4.5 million.
Oh, impressive then. Yeah. Okay.
At the time, we were quite excited because after considerable amount of working on our own, finally we got some support. Not only support from the political side, but also support from the economic side. So we had some money. We could, I stopped draining my own savings. In fact, when I came back from the U.S., I put all my savings into my pocket.
You left China with $17. When you came back, how much you have?
I had 10,000 US dollars in my pocket, cash. I came back, I changed that 10,000 into RMB at the black market rate.
Yeah.
At the rate, right. And I used most of that money to print, at that time, each page of document, A4 paper, would cost 50 cents, 5毛钱. And we.
But you got this very thick document and printed out for everybody for reference.
For everyone to tell people, and I had to, just at the Shijia Hutong, at the beginning of Shijia. Yeah, we would go there and get those things printed out one by one. And I just saw my savings going like that.
All go
right.
to the printer shop.
Right, and then I will use that money also to take all the people who later join us, take them to lunches, dinners, and try to persuade them to join us. And we succeeded.
Extravagant, I guess, because that's
no, we had a 涮羊肉mostly.
Hao Pao, that's it.
Right. But many people remember that Mongolian hot pot.
Over the past 35 years, China's economy has achieved extraordinary growth thanks to its market-oriented reforms and opening up. By the end of 2012, China became the second largest economy by GDP size just after the US. But concerns have been swirling about the health of China's economy, which expanded at its slowest pace in 25 years in 2015. China suffered hundreds of billions of dollars in losses in the 2007 stock market crash. And last year's $5 trillion stock market bust resulted in an unprecedented government rescue that reverberated around the world. But with the recent appointment of new securities regulator head Liu Shiyu and new reforms, China is gradually restoring investor confidence. In a speech closing this year's two sessions, Chinese Premier Li Keqiang said it would be impossible for China to fall short of its relatively high 2016 growth target of 6.5 to 7%, even as it pushes ahead with structural reforms. There have certainly been ups and downs for the Chinese economy, and managing the stock market remains a big challenge for regulators.
I was a regulator for many years. Right. Once I became the regulator, and all of a sudden I just found, all these problems coming to me, and there seemed to be no answer to many of the things. But to me, the most important thing really was that, first of all, you've got to do what you've got to do. You can't just say, okay, forget it. No, that's not insolvable. No, I have to solve the problem. Secondly, there's got to be some people coming in later and say, okay, you missed this, you missed that. I said, well, no, I tried. I tried very hard for it. Thirdly, this is probably more importantly, is that you cannot just depend on your own or on some academic model to do it. You have to try to use the wisdom of the masses, of the people, especially the wisdom of all the people, the stakeholders. I always try to get people together and try to get the big mouths, all getting in, invite them over, please say something to us. Some of these people are very, very critical of us. They would speak nasty words right in my face. I said, I don't mind, so long as you can come out with something that's that's useful for the betterment of the overall system.
But that sometimes people also say if you hear so many voices, you might be distracted.
At the back of my mind, I always have certain things that I regard as sort of principle. Out of my own desire to work purely for the system, for the betterment of the system, and without any personal agenda.
You have nothing to fear.
Right. I'm not going to be in favor of any particular interest group. At the time, there were many different things. People say, well, we should support state-owned enterprises first. Or they say, well, we should support private enterprises first. I don't buy those things. I would say, okay, what I'm concerned with is a system that works for everyone.
What do you make of what happened last year, some of the ups and downs, just as an academic? And how do you think, moving forward, solving the problems, as you are always eager to?
As People's Delegate, I just submitted my proposal to the People's Congress.
What is it about?
It's about to clarify the responsibilities and functionalities of the Securities Regulatory Agency. The other part, the proposal to work out a post-crisis method.
I know you're trying to translate the Chinese into English.
Right, of the of what happened during that crisis period.
Is it possible that market to play a decisive role?
Well, in economics, there are all these debates over the past 200 years, 300 years. And today we're still, part of our government still believes in original Leninist or Stalinist even, central planning way of doing things. That's why in many parts of our economy there are still all these heavy-handed central planning. But on the other hand, there are people who believe in, market functioning. But, with typical Chinese wisdom, we say let the facts decide on, how we think. Then you look at the facts. We've tried planned economy for so long, and especially my generation. I've been through all these hugely, scarcity period of time, and I was hungry for many years. That's why I eat so much every day today.
Just to make up for it.
Right. And today, we all know that you can not possibly go back to that period of time. At the same time, we also know that pure, total, laissez-faire market economy probably won't work either. Because we look at the U.S. economy, we look at the European economy. They are full of problems as well. It's true that their economy now is running sort of better than most other economies by the general level. But from time to time, we have what they say as market failure. When the market start to have major problems, then the system couldn't handle it. Like what happened in 2008, when the whole financial market was in general scare, and people thought that the capitalist system was going to crumble. But they came back, and their systems are, they have a system where they can try to correct these problems and come back. Everyone has a different view. That's fine. But for us, I think the most important thing really is that we should be realists, especially when running the government. We need to be honest with the market. We need to be open-minded, transparent with the general populace.